Metro Manila's condominium market is expected to see residential vacancy rise to 25% this year as unsold units in mid and lower mid-income segments continue to weigh on the market. And joining us this morning is Joey Bondoc, Research Director at Colliers, Philippines, one of the country's leading real estate advisory firms. Good morning, Joey.
Good morning.
Glad to have you here. We're going to be talking about the Philippine property market right now, but tell us the big picture. How would you describe the state of the Philippine property market?
Well, if you look at the residential market, Pauline, especially the condominium segment in Metro Manila, the good news is that it is recovering. If you follow Colliers reports, and if we're having this discussion fourth quarter of 2024, first quarter of 2025, I would tell you that it will take what? How many? 13 years to fully absorb the unsold condos in Metro Manila.
13 years.
Crazy, right? But right now, we're down to less than 8 years, 7.9 years to be exact. Why? You know, we get flack for this, for saying that it will take time for the market to fully absorb the unsold condominiums. But what's interesting is that after, Colliers released those indicators and data, developers ramped up the offering of promos ready for occupancy. Right now, you no longer have to shell out a hefty sum of money, 5% of total contract price, to be able to move into a already completed condo. All you have to do is pay 2 months worth of rent, and then you can move into a condo, completed condo already. So we have seen a substantial reduction, mainly because developers have been offering these attractive payment terms, ready for occupancy. You just have to lease the condo for up to 36 months, and then you decide if you want to pay it, if you want to buy it. 60% of what you paid will be deducted from the total contract price. And these RFO promos, lease-to-own terms offered by developers, are bearing fruit. So from 13.4 years, we're down to 7.9. That's a pretty drastic improvement. Let's see if we will carry that over to 2026.
So these flexible payment terms have been effective.
That's correct.
But demand for pre-selling units seems strong. But once they're ready for occupancy, owners struggle. So there seems to be some disconnect.
There's disconnect, Pauline. And the disconnect actually lies in the monthly payments. So for example, if you're buying a condo under construction, pre-selling, you pay how much? 11,000, 12,000 monthly. And then when that condo is about to be turned over after 5 years, you now experience balloon financing.
Right.
Imagine, from 11, 12,000 monthly, your monthly payment balloons to 50,000 pesos. So if you're a buyer, you back out. That's why we saw a lot of backouts second quarter, first quarter of 2025. But again, developers offered these attractive payment terms, and we have seen an improvement. So this is really helping revive the market right now. The RFO promos, the implementation of all these innovative payment terms. If you pay spot cash, Pauline, you get a 60% discount, 40% discount for a condominium unit. Developers are offering free parking. I know you'd love that, right? But these are the promos and trends that we're seeing in the market right now. And for developers, the challenge is the sustainability.
Right.
Because are we seeing an RFO or promo fatigue in the market? Remember, if you look at the take-up on a quarterly basis, we actually saw a slight decline, meaning backouts increased marginally in fourth quarter. So from about 2.7 thousand condo backouts in the third quarter of 2025, that increased slightly to 3,200. So we'll see by the first quarter of 2026 if there is really an RFO promo fatigue, or is this just a blip and that the market will eventually recover starting first quarter 2026. We want to start the year strong. We want to end it stronger.
I wonder if that fourth quarter data has something to do with holiday spending. Of course, people want to buy their presents,
That's
right?
correct.
But okay, here's a question. If I'm a Filipino buyer, is now the right time to enter the property market?
Definitely. If you are an end user, Pauline, meaning if you want to rent a condominium unit, you want to acquire a condo, you want to live in it, now is a very good opportune time to do that, because we believe that now is an end user's market. So if you want to live in that condo, you want to be near your workplace, definitely there are a lot of options. I think that, and this is a very practical advice to a buyer or an investor, you really need to do your research, because whether you want to acquire a condominium and flip it, resell it in the future, or live in it, rent this condominium unit, there are options in the market. You have several options in the Bay Area, fringes of Makati, Ortigas, C5 corridor, Quezon City. I see you taking down notes, and I think you're acquiring a condominium unit soon. But, you know, these are the opportunities that we're seeing in the market. Whether you are a developer or investor, opportunities abound. As we always say, these are opportunities amidst all the uncertainties in the Philippine property sector.
But in your report, you also mentioned that the mid and lower mid-income segments are weighing on the market.
Yes.
Why are these units harder to sell or to lease?
Okay. I'll give you an indicator, a figure. There's about 30,000, close to 30,000 unsold, ready for occupancy condominium units in Metro Manila. And about 40%, nearly 50% of those are coming from that mid-income segment. Again, if we're having this discussion last year, I would tell you that a lot of those unsold RFO completed condos are from that segment, perhaps 60, 70%. But we have seen a substantial decline in terms of the share of the mid-income to the unsold RFOs. And again, that's a result of these sweet, attractive, innovative RFO promos being offered by developers. But let me say this. If you are an OFW buyer, and if you're a broker and targeting the OFW segment, the sweet spot is the 2.5 to 7 million pesos per unit. So that's affordable to lower mid-income. So
2.5 to 7 million.
Per unit, yes. And given that, you know, a lot of Filipinos are being deployed abroad, they're sending home more money, remittances every month, $3 billion. We believe that OFWs will continue to send money, and they will continue to purchase residential units. Developers have invited me abroad for their international briefings. Ayala Land, Robinson's Land, Vista. And I've seen the Filipino buyers. And one niche market that these developers have been catering to, the student-centric condos. If you're an OFW, you have a kid that will enter college soon, you buy a condo for your child or for your son or daughter, because this is, again, a very strong period for an end user. So you buy a condo for your child lives in that condo. If you want to lease it out, of course, you have options. If you want to resell it in the future, you already gain price appreciation. You buy low, you sell high. So again, all these opportunities abound in the Philippine property market, despite some challenges here and there. So,
well, I see you emphasizing end users. But
That's
what
right.
if you're an investor? You'd like to invest in the real estate market. Is that still a viable
interesting question, Pauline, because right now, if you look at the Metro Manila condominium sector, again, yields are very low. They're compressing.
Right.
If you buy a condominium unit, say a 50 million condo unit, and then you rent it out to an expat, for example, how much will you be able to rent it out? 1,000 pesos per square meter. So if that's 150 square meters, 150,000 pesos. But your yield, very low, 2-3%. So given that yields are very low, if you are an astute investor, you need to diversify. So you don't just buy a condo, you look for other investment options. And one investment option that has really been growing is the lot-only segment. We have seen projects by Rockwell, for example, in Bulacan, Batangas, sold out during their first phases. And they're about to launch their second.
Lots.
These are only lots. But if you look at lots, for example, by Rockwell, the likes of Brittany, Ayala Land, Premier, for example, you can achieve a price increase of what? 8-10% on an annual basis.
Wow.
So if you're not really keen on yields, then you shift to a capital price appreciation play. So you have those options outside of Metro Manila. But again, if you are an astute investor, you need to do your research. In fact, some developers, including SM, Signature, is launching its luxury, ultra-luxury project in Susan Heights. So again, you see a lot of opportunities. Even Mega World will launch its own. So definitely, you have a lot of options right now in the
And
market.
all these are outside Metro Manila, but
That's
those
correct.
could be the golden opportunities for them. But let's talk about other sectors showing
okay.
strong momentum. Aside from residential,
Yes.
what's your outlook for the office space, retail space, and even industrial?
Okay, let me start with the office sector. I think for the office segment in Metro Manila, we're seeing sustained demand. Of course, there are previous challenges about artificial intelligence, work from home, but BPO companies continue to expand. Fintech companies continue to occupy office space. Even Cebu, Pampanga, we see a sustained demand for office space. You have the likes of Rockwell, for example, building its own office building for sale in Cebu IT Park Fringe. And then you have Arthaland also. When you go to and shift to the retail sector, interestingly, we always say that developers, mall operators, as well as retailers need to innovate. Otherwise, they will evaporate. And, right now, the vacancy is about 10-11%. But we believe that by the end of 2026, mall vacancy across Metro Manila will be down to about 9%. And that's the pre-pandemic mall vacancy, Pauline. Meaning there's a massive take-up of retail space. Go to malls right now. There's an Anco, IKEA. They occupy massive retail space.
And this is despite the rise of online shopping. What does that say about how Filipino consumers shop? I mean, they still want
That's
to go to
correct.
malls?
Interestingly, Pauline, remember, in Metro Manila, we don't have parks.
Yeah.
And these malls are actually our de facto public spaces. You go to mall, you can renew your license, your passport, you do activities with your family. Right now, what you're seeing, in a department store, you have a coffee shop. Muji has its own bake shop, coffee shop. You sit, you sip, and then shop. After sipping coffee, you shop again. Retailers are really maximizing your peso of spending right now. And they really want you to spend more. And what's interesting for the retail sector, it's becoming more experiential, immersive. When you go to a mall, you don't just go to a favorite clothing store and buy a shirt. You go to your clothing store, your favorite one, and then you visit other spaces, activity centers. You go to the cinema, food hall. It's no longer called the food court. So these are the new innovation that we're seeing from mall operators. And they have been really active in replenishing, refreshing their mall spaces. And this will likely be the trend moving forward.
Well, it's going to be an exciting year for the Philippine property
I'm going to the
market.
mall after this.
Okay, maybe I'll go with you. No, but that was a very great conversation
Yes,
there.
thank
Thank
you,
you so much for
Pauline.
joining us
Thank you.
this morning. That was Joey Bondoc, Research Director at Colliers, Philippines.